Welcome to another episode of the CrashLabs podcast with me today, Josh Duggan and CJ Kim. This is going to be just a regular shoot the shit podcast today. So,
couple buddies
talking the world, talking.
We had a guest lined up and he bailed.
Yeah, we had a guest. We had a guest lined up and the guest bailed at last minute, but that's okay.
It happens.
They'll be in.
They'll be back.
We're not that big yet, I guess.
Nope, not that big of deals.
It's all right.
So, what's going on in the space this week / last week? What are we seeing?
I think everyone's feeling tired. Investors are feeling tired, but the news is still there. Like things are happening still.
Is it a summer slump right now?
I think we've been in a slump for a while. I haven't been seeing a lot of good deals. Have you been seeing anything out there?
No, it's been pretty calm. I mean, obviously we're part of the Magotes deal that's going public as we speak. Mm-hmm. So that's the IPO. We were in that privately. So we're happy to see that, IPOing. It's a really exciting copper thing. But outside of that, no, it's not. There's not a ton of stuff. I mean, it felt like with the Warrior or the Kirkland Lake Discoveries deal, it felt like we were just at the very end, like the last breath of any care that any investors had. It just felt that way. I know that's not true, but that's how it felt. Kind of getting into it. And I have talked to some people and they're saying they've been out there trying to raise money and try to do things and they're really having a hard time.
It's hard to get excited over, it's hard to get excited right now. Like I'm feeling a little bit exhausted when I shouldn't be, but I think it's maybe fatigue, but this should be the best opportunity for us because not a lot of people have money to deploy in the space, but we're just not seeing any good deals.
Who's that guy that I met in Miami? Or what firm was he with? Was it Goldman Sachs or something?
JP Morgan.
JP Morgan. It was like he was with one of these big, and he was a big multi-billion-dollar, $100 billion fund or whatever. Mm-hmm. And we were talking about, he was the PM for that fund. And I spent the night talking to this guy. And we were talking about the metal space and just everything in general. And I think what he said was really interesting to me. And it wasn't news, but it was just interesting, And he's like, yeah, he's been long copper for a really long time. And he's been super loading up on copper. And he's like, obviously you buy things. He was just sort of saying it matter of fact. Like you buy things when everyone hates them. Mm-hmm. He's like, that's when you should be buying something. When everybody's talking about it and everybody loves it, it's probably not when you should be buying something. Mm-hmm. But when everybody hates something, or no one's talking about it, then you kind of know that that's probably a reasonable time to buy in. Mm-hmm. And I sort of somehow feel that way right now about mining as a whole. It's like you said, you're like a little bit kind of tired about it all. There's not a whole lot going on. It's not that interesting. But in the political sphere, it's a powder keg. Mm. In the banking sphere, it's a powder keg. Real estate, all that. There's a lot of shit going on. And maybe, just maybe, this will be looked back on that kind of weird time when everyone was exhausted.
Yeah.
Nobody gave a shit. And it was like the time to buy.
I guess, blood on the street, that old adage. Mm-hmm. But, I think news-wise, you are seeing a lot of good deals where you're seeing deals that could indicate that potentially we are at a bottom. Like normally, a leading indicator is you see a lot of M&A. Maybe not in the gold space, like we saw Yamana get taken out, but in the copper space, there's a lot of huge moves. And if you look at copper companies, these are big companies that are making potential moves, like Glencore on tech. You have Barrick trying to take out First Quantum, and that's almost a merger of equals right there. First Quantum's worth $22 billion.
Well, I mean, we did see it in the gold space because we did see Newmont with Gold Corp, an entire major company got absorbed.
And Newmont with Newcrest.
Newcrest. There's been a lot of big. There's the B2 Gold and the Yamana thing was happening. There's a lot of that. I'll agree. It wasn't this seems really condensed right now.
But they are smaller companies in relation to copper companies, right?
Right.
And then you're seeing, what else was there? Hudbay taking out Copper Mountain.
And Rockcliffe.
And more recently Rockcliffe, which is
it's one we've had our eye on for a while.
Yeah, and it's very, I guess, opportunistic, right? Because And then Josh was saying Barrick said that they want gold companies with copper exposure, or just pure copper companies now, right?
Yeah, I mean, Bristow came out to saying as a gold producer, you have to have a copper strategy. Go forward. It's just mandatory.
Now, I wonder if it's because, he's been saying it for a while, but maybe it's because he's missing out on all of these gold deals, or he just...
I think so. I mean, he tried to be fairly aggressive, but, has been turned down so far in a lot of acquisitions, right? So
Yeah, I feel like they were late to the party on a lot of things. Like they were kind of there for the Great Bear thing, but late. I don't know. It just feel like they were late to the party. But it's hard to say. That's all. That's total bullshit. Anybody listening, it's total bullshit. I don't know what I'm talking about. I'm just like I just kind of observing. It just feels that way.
he tried to take out a couple other companies too. I got to think about who. But yeah, just too early stage. Tried to do a couple MOEs. Couldn't get it done.
Yeah.
So, reserves are dropping. What is he going to do?
Yeah.
But then we see like the B2 Golds. We see like the BHPs. We see the, like Rio Tinto.
Yeah.
Tech. With what's happening with that whole thing with Glencore. Like Rio Tinto stepping in and taking footholds and things in like BC and Yukon and weird places and Alaska and stuff. Like, and then you have like same sort of thing with BHP, like BHP's taking a toehold in things, and like, man, it's really weird.
It's weird and feels not desperate yet, but they're dealing in an industry or sector where it's finite resources, and that's pretty scary to them. And I can see why Barrick would want to pivot to a commodity where the mines are substantially longer than gold, right? When you're dealing with these mega mines, especially in South America and stuff like that.
Well, there's no doubt that the base metal companies are far more resilient.
Yeah.
Yeah, he tried to take over Newmont a couple times, right? So even back in 2019, Barrick tried to do a hostile bid for Newmont. They ended up just doing a joint venture instead. So he's been trying for a while to get some deals done. Just, hasn't worked out. It's hard, right? And obviously First Quantum said no.
Yeah.
So we'll see if that goes down the road of Tech Glencore. But
he had everything going his way. He was the golden child for a little bit and just kind of tapered off from there. He couldn't get anything else done.
Sure.
Do you think that from like, let's say 2014 until arguably 2018, 2019, that was like, there was nothing at all in that pocket, like zero. Even 2020, like there was a little bit of a bump there with the COVID bit, but realistically, let's just say there was zero going on. You didn't see a whole lot of any consolidation. There's way more going on, activity on that front happening now. Like in the last 6 to 8 months, there's been a lot more activity. Or am I just on drugs? Do I want to believe that? But really, maybe I'm just like...
There were some, but they just weren't splashy. Like taking a mine in the north out of receivership and fighting over TMAC. And I'm pretty sure we're missing a couple of big ones in there, but it doesn't feel like the activity that would kind of rock us out of the stagnancy that we've seen. Like gold's at 1950. Isn't that what we were waiting for 10 years ago?
Yeah, it's the dream price. Yeah, for sure.
Yeah, 2020 was, I guess, the Barrick ran gold, and then you had Newmont Gold Corp, right? So those are the two big ones coming into there. So the megas, and then lots of little juniors, but I think substantially more interest right now for sure. As we head in, and like we said, commodity diversification is key. So.
Yeah, well, on that copper space, I think it's interesting because obviously we're seeing a lot of policies, governmental, et cetera, push for net zero, push for climate, electrification, all the car manufacturers with their whole, lithium, move. I mean, that's certainly telling you something. And then of course you've got, when you actually look at the models and make some models of cars that are coming out, you got the Ford F-150, Lightning, all electric pickup truck, like who would have ever thought that would be the you'd see that.
Yeah.
And then like all the new fleet of what's coming out, Mercedes' new line and, Volvo's new line.
The electric
and
Hummer.
It's all
coming to Canada soon.
Yeah, right. It's all
You got
electric.
the Escalade and being announced next week. The all electric Escalade.
Oh, is it really? Yeah. So there you go.
Put in your calendar.
So it's all that's all happening. And we know we need the copper. We know we need the that infrastructure. I mean, so I get the copper bit. I guess that's where I'm going with it.
Yeah.
But it's weird that when you see all this activity happening with the major companies, there's not a ton of attention on South America. You would have thought that if copper was on the uptick, right, and then it was time to act, and companies were swooping in and doing, earn-in deals, or they were doing purchases, and there was consolidation going on. I mean, save First Quantum with the whole Barrick thing, and probably a couple of other major acquisitions. But the reality is, you're not seeing a ton of, if I were to imagine a universe where copper's on the go, rewind the clock 5 years, I would have said majority of the activity will be in Chile and Peru. Mm-hmm. Chile, Peru, Argentina, maybe Ecuador, maybe you may have some Colombia, you may have some stuff like that. I would have said the BC has been going the way of the dodo bird just because it's so annoying to get things permitted up there, and it's just the regulatory environment's tough, and it's just not friendly, and it's hard, and the seasonality and access sucks, and I wouldn't have thought a ton of money would be going there. Or Yukon, I would say, yeah, probably in South America, but that's not what was happening.
Geopolitically, South America's tough too, right? You to invest billions and billions of dollars, especially in these markets, I imagine would be off-putting they're so dialed into those countries too, right? So I can't imagine their political risk is as bad as what we look at or assess the companies under, but it's still scary for them, I imagine, going into a market like that, or to put more money into markets like that.
Yeah, a lot of them have a toehold in those places.
Yeah,
But you're right though. It's clearly something going on because there's a lot of projects on the docket. Let's say on the tray of brownies of sort of next assets to be put into production that were sort of undergrade and undersized from last cycle. That would now, with new prices and new highs and things like that, and or new anticipated highs. Let's say those would be reasonably able to believe that those would be the assets that would be the first to go because they're already been drilled out. But there's some early stage stuff that's being speculated upon by the BHPs. And
my big call is I think copper projects in North America are going to have pretty big premiums coming into the next couple of years. I think people want copper base metal in good jurisdictions in North America. So maybe not BC, what you're talking about, like Ontario, Quebec, places in more mining friendly areas in the States and stuff like that. And
for the geopolitical risk averse.
Because it's always one of the common themes, everyone, when you look at a mining company, they look at the management team, they look at political risk. But, when you looked at companies in the past, did you put a huge onus on the political risk, or did you just kind of chalk it up to that's mining, right? That's part of the risk, and that's why we're swinging for the fences here.
It would depend on the scale of the asset. It would depend on the stage, and it would depend on the jurisdiction.
Yeah.
Unfortunately. I mean, there was places that were just no-fly zones.
Yeah.
Right? Venezuela was a no-fly zone. Congo was not good. Mozambique, Zimbabwe. Mo's really didn't have a good reason why not. It just lacked infrastructure. The geology was there, but politically it was fine. Zimbabwe, was a no-fly zone. There was a lot of the South African I would say deprioritized South Africa, Papua New Guinea. The Australians love it. I would have always seen that as a bit of a risky jurisdiction. The Middle East, for sure, would be a complete
How about Zambia?
no-fly zone. If somebody had an Afghanistan project or an Iraq project, forget it. I wouldn't go there.
Zambia?
Zambia, I don't know. I don't know enough about Zambia. I'd have to look that one up.
There's apparently more activity there. Well, Kobold Metals invested $150 million into a copper mine there, and they're supposed to be an AI company. And
Get the hell out of here. That's what they did?
Yeah, they put
Yep.
$150 million into it, and they're apparently raising another 100 million that I imagine they're going to double down in, because they pivoted hard to pure exploration, but they've been riding the AI narrative for a while now, and now that AI is hot again, they're
Raising again.
Yeah,
Yeah, raising at about $1 billion valuation.
Well, last time they did too.
Yeah,
I heard it through the grapevine.
that was the rumor last time.
Yeah, I know some people that know some people. That's what they were doing. We talked to them. What's interesting about that group,
yeah,
so Kobold, they were, clearly, they sort of were thought to be almost a competitor to us with Spot. They stayed the private road. They came out of Silicon Valley. That was like that was the nucleus. Then they had some incredible like professors like Larry Minert and all these people. They were like bolted in, like this technical acumen that was bolted in with these people, but very academic. And then, they kind of had some more roundery types running the show, like the CEO and stuff. Were more like,
but they were pure academics too, though, because not the president, the CEO was a professor at Yale, right? And that's how they were so dialed into Silicon Valley.
yeah, there's something going on. But I remember speaking with him, and he was a bit of he came off as a pretty more of a rounder type guy.
Yeah,
We'll say.
well, remember, because it feels like everyone in that goes into AI exploration has this idea of what they want to do, and they kind of have to pivot. Like for us, we were very true to our thesis and vision when we first came out of the gate, saying that we're technology first, and then we will try supplement that with the businesses to keep it going.
Yeah, it was all about like bootstrapping it with
business
models that would propagate the technology.
When we spoke to them pretty early on, they were pretty adamant of finding a project and taking it to production, and they were able to raise enough money to go right into production.
Well, that was the theme, and then the theme at the time was going after. Remember, they had the selling point that they had pulled in money from like Bezos. It wasn't Bezos. It was like they were like Bezos, and
It was a fund that they had.
it was a fund that they had a small position in, but nonetheless, it was like a Silicon Valley.
That was the headline across all news agencies.
Green fund, though. It was just like some like green ESG fund, right? And the entire narrative to that was, you have basically blood cobalt, right? That was what was being sold. It was like you have blood cobalt coming out of the Congo. And so we need to find domestic supply and domestic sources. And so these guys were, banding together and leveraging AI and Silicon Valley's best and the best out of the mining academia, and that they're going to put their heads together and sharpshooter some, domestic sources of cobalt and battery metals. And that, they were called Kobold for a reason, right? That was the whole point. And then, they kind of went on, they did their Series A and they, whatever. And then when they took their last big financing, they raised like 200 million or 300 million or something silly.
A couple $100 million, right? I don't like
as a private.
Yeah. Well, and to their testament, they were staking. Remember, they staked all that land in Saskatchewan and stuff. They did that JV in Greenland for, looking for battery metals and stuff.
Yep.
And then they invested into Zambia, copper cobalt project.
Well, this is it. So this is where it like bifurcates, right? Because it's like, okay, you raised $200 or $300 million. Then you're going to go out and find something. I remember when that happened, I'm like, okay, you're at least $1 billion valuation.
Yeah.
Plus you have $300 million in cash. What could you possibly do to justify, like you literally need to make a monumental discovery from scratch, and it has to work out, right? Remember, they're private.
Yeah.
So you have to find something with serious, tangible, like, like you have to prove it.
Yeah.
And like go find a green piece of moose pasture and spend $200 to $300 million justifying a $2 or $3 billion deposit. It's like a very tough thing to do. And then it was like, I was thinking about that, like some impossible hurdle. They have to go and buy something. They have to go invest in something or they have to go buy something.
Well, they didn't find anything, so they had to buy or invest in something big already in production.
So they end up in, as you said, Zambia.
Yeah.
So they buy this, but that's so counter to what the VCs put in money to in this like ESG fund before. It's like responsible cobalt from domestic sources is now it's like, oh yeah, well you know, like, I mean, they could have just gone to Congo and fucking bought a cobalt mine in Congo and they've been okay.
And it doesn't work. You had that AI company in Chile that was backed by all the Israeli investors.
The Israeli guys,
They tried to find copper down there and they blew up.
Yeah.
You know, I imagine a part of me saying this, like, it's good for the space. Like, but there's only so much technology that they can do. Like, you put $1 billion into the tech, but they had to justify the value that they were bringing in money. And then all of a sudden they're going to buy part of a copper mine in Zambia. But they haven't made any true progress, I think.
No, they just ended up, you know, raising a huge market cap, getting a bunch of money, and now taking that money and buying a stake in a copper mine.
Yeah.
That's like, you could have did that anyway without saving all the AI. You didn't need any of that.
They didn't make a big discovery like us.
Right. Well, I mean, it's interesting. They took a different path. I'm not knocking these guys, by the way. That's an incredible achievement to have to go through from like a startup company and then take the path they've taken, raising the amounts of money they've raised at the valuations they've done it at, and, you know, everything else. But in terms of the narrative, I'm all over the place on this. I've seen it more from a cobalt domestic thing to a battery metals thing to maybe a nickel thing. When they announced that they took in the money, they said they were going to pivot to nickel. Now they're in copper, and now they're in Africa.
Yeah.
And it's like, but I mentioned it on the last podcast that I actually think Africa is kind of a cool place. I think it's like, you know, one of these, I think like, well, it was like sitting through that meeting when you learn about Zimbabwe and you learn about what's gone on there now. Like, they've overhauled everything since Mugabe, and it's back to a friendly jurisdiction. It's kind of open for business. And so, well, a lot of these countries are very rich, like in resources and things. And
yeah, along that side, a lot of copper.
Yeah, and then there's a pissing match between North America and Asia in, you know, call it the Axis and the Allies, let's say, like the two kind of polarized groups right now, the East versus the West, and like Africa is like a battleground without actual battles. It's like an investing, it's like a pissing match.
We talked about it as a chessboard, right?
Yeah, it's a chessboard, and it's like who can throw more money at them. And so, I mean, shit, you'd stand to benefit a lot probably from finding, like, your exit potentials are far higher. I mean, if you're into a discovery story,
yeah,
I mean, it's a great place to be because the Chinese and the Russians will buy you all day, and nobody's going to stop that. But, you know, if you find something in Ontario, let's say, that's really big, like, the government would never let China come in right now and buy it, and they'd never let the Russians buy it. Mm-hmm. So, or the Saudis, you know. So, it's a cool place to be. Who was it? Alec Rollins' company that he was involved with in Ghana.
Asante?
No, the one at the north, and like bogus Cardinal, yeah. So Cardinal had what, a couple million ounce resource, couple grams type thing, and they sold to the Chinese. So that would have never been allowed to happen here, probably.
No, I don't think so. I don't think any major resource is going to be sold to
Not anymore.
hostile, quote unquote, hostile country, right?
Yeah, and they were pretty much private, I think, for a long time, like that company.
Yeah.
They were like, and then they went public, and only public a few years, and then they, you know, it was a quick exit.
Yeah.
Yeah, so I don't know. I think that's interesting. It's interesting because it's sort of back to that thesis. Like, if nobody likes it and everybody thinks it sucks, or nobody's at all interested, maybe that's the time to be getting in it.
Yeah. And I think, like, while we may be feeling what everyone else is feeling, the reality is, like, we have the pockets of money, and we've always known that we were going to deploy when the markets are depressed. And that's how we built the last, like, when we built the resource bank, when, like, stocks were at an all-time low, but projects were just at a bargain price, right? And you were able to go in and gobble up everything for the land bank. And, you know, how many great companies were spun out of that?
Yeah, a lot. But, you know, it's just about the bottom. I think that was a real bottom opportunity, but I don't see a worse one now. I don't think this is any less a bottom.
Like, better off than where we were in 2015, 2016?
In terms of being a bottom?
Yeah.
Yeah. I think, yeah, because you have less of a mountain to climb in some ways to get out of the bottom, at least it feels like. And then, but in terms of negotiating, people are beat up, man. People are really discouraged. I mean, if we look at what Jason was saying, so again, back to this whole flow through thing, we had Jason in last week talking about flow.
Sure.
And like, I left that and I was doing a lot of thinking. I know it was a boring episode and a lot of people probably didn't want to watch it, but it wasn't boring for me. It was like one of the better ones we've ever had because I really genuinely learned something that was like a bit of a mind-blowing thing. You know, this policy change that was coming down the pipe. And you see the spending, this government is spending like crazy. Good, bad, or indifferent. They're spending an unbelievable amount of money. And they have to. They have to get it from somewhere. And so they have to get it from taxing. It just has to, it's not going to fall from outer space, right? So I look at this flow through thing, and I was just sort of like doing the math on it. It's like, if you get rid of that whole charitable flow aspect, where you can't roll over the flow through, or you get charged capital gains, like a minimum amount on the flow through shares that you roll into a charity, if they're getting rid of that, and they take away that incentive, there's literally no incentive to buy flow through. Like, it makes no sense. For me, my funds come from capital gains. I make very little on salary. So little on salary, it really makes no difference to me. Like a flow through contribution to offset my personal, tax exposure as a human being is limited. Like, I still don't see a reason to go buy flow through as a person because I don't get paid enough. Like, there might be a doctor out there that's getting $1 million a year, or some consultant out there that's getting a couple million in consulting fees. Like, if you're making your money in capital gains from trading activities, you're not the right candidate for this. But if you're making your money from like consulting fees and from income, like just regular 52% tax rate income, then this all makes sense if you have the charitable flow through component to roll it into. Yeah. Only then. And so what happens if you get rid of that? I don't actually think the flow through side will be fine. I don't think it'll flourish at all. And it doesn't look good, guys. Like, it looks like the mining space is going to be starved of flow through money.
Yeah. And especially since the lion's share of Canadian exploration is done through flow through, like a ridiculous amount.
Like 80+%.
80 plus.
Yeah. PDAC has a great chart about, the reality that flow through market holds up the Canadian junior resource market. So it's a stark warning for what could be coming down the pipeline.
Dude, it's scary. It's like 80%, plus 80% of the money that we spend on drilling, on geophysics, on geochemistry, like this entire Canadian exploration universe. That's a lot of that's flow through money.
Yeah, we should look at the percentage of charity versus flow, and then we'll have to do some analysis on how it affects.
It really
overall.
doesn't matter because it's the flow. The incentive to buy the flow is being rolled in. A portion of it's being rolled into a charity, and the other portion you're keeping. That's how you do it. So if you buy 100K of flow, you'll get the tax rate. You'll get the tax deduction, right? And then you take half of it, and then you donate that to charity. You get a double deduction, and you keep half. So that's money you would have given to the government anyway. So now the government's saying you can't do that anymore, right? And so why get the flow in the first place if you know you can't do that?
It's fair.
So then all of a sudden, you're not getting the flow. You're just going to pay your tax bill.
Especially for the people who buy flow, not because of mining, just because of the tax efficiencies. They're just going to look elsewhere, right? So they're not in it to support these companies. That's tough.
Yeah, it's like the charitable flow thing and the flow thing was a very thought out thing. It sounds like a loophole. It sounds like some abused loophole by wealthy people to like circumvent paying taxes. And it's like, it is, but it also supports the most important piece of the Canadian economy and literally the lifeblood of this country since its inception is the resource space. Yeah. It still remains that way. And so it's like, literally, I mean, fine. If we were still in the business of like beaver pelts, then that would be, that would be a thing. But I mean, still a natural resource, right? the Canadian history, the Canadian story arc is paved with this, and in the future it likely is too. And it's like, well, that's all there for a reason, and that's to support that and give us a leg up. If you take out that leg, what do we have a leg up on? We don't have anything.
Should an industry be able to flourish then without the support of the government? Like, technically, it's not a good sector if you have to be propped by these these incentives, though, right?
Well, what can be a good sector when you're running a 70% income tax? Because if you look at it, like if you're making a lot of money, you're paying 52% taxes in this country in the highest bracket.
Yeah.
Right off the top. Plus, we have a 15% VAT, which we call HST, harmonized taxes. So that's a purchase tax. So all of a sudden, you add that all up, and all the different, all the end members of tax. And it's like, yeah, we have a huge, crazy, ridiculous tax rate. And it's like the only way for any business to thrive is to be affording it subsidies and loopholes and things for it to be able to flourish. Like the energy sector too.
Yeah. Well, they're subject. They get flow through the oil and gas industry as well.
Well, the solar. Think about like the solar industry.
Oh yeah.
And the wind power industry.
Initially, they were getting crazy.
Still.
Subsidies. Yeah.
Oh yeah, those things would go broke tomorrow, because they're selling their power to the grid at like 10 times multiple what like a hydro plant or a nuclear plant gets to sell their power to the grid at.
Yeah.
At least in Ontario, it's like not even close. They'll pay like whatever 60 cents a kilowatt hour. I'm making these numbers up, so nobody fact check me. But in principle, this is illustrating the point. They're paying like a hydro dam will like sell its hydroelectrically generated power to the grid at like 6 cents a kilowatt hour. Customer pays 8, 9, 12, whatever it is, right? It gets marked up by Hydro One. If you take like a wind farm or a solar farm, they get to sell their power to the grid at like 60 cents a kilowatt hour, and the government subsidizes that, right? So it's like if you put them back down to 6, where all the nuclear are and where the hydroelectric guys are and everybody else, they would go broke because they can't operate for 6. They need the subsidy.
So it feels like in Canada, the best jurisdiction is just going to be Quebec to look at.
Yeah, or large cap.
Yeah. Well,
or is this the death of junior? Is this the death of the junior explorer?
Well, we know more than a handful of guys that only survive off flow, right? They can't raise a cent of hard right now. And when they can't raise a cent of flow, that's it. So it's gonna be pretty difficult. I think we're gonna see a lot of the swamp cleaned out a little bit.
Well, they're all meeting in Quebec right now for that conference.
Yeah.
So basically at VRIC in Quebec at that Mining in North conference, at the 1-to-1 conference in London, England, arguably. I mean, most of those attendees, they're all flow-through dependent people.
I wonder if we are exaggerating the effects of this loophole being closed up, or is it really going to... Because you'd think that a lot of these guys would be talking about it more. What is PDAC saying about it? Because they were quite the big lobbyists behind, or like huge proponents of flow through, because they know how important it is. And
yeah, I mean, obviously from what I read, it's just just trying to point out the importance of it and limit the new rules. But the new rules are going to affect next year. So I mean, it's still lucrative. It's just not as lucrative anymore.
They're asleep at the wheel, those people.
Yeah,
the PDAC types and those all those committees. I don't think they know anything really. I think they meet and they spend a whole lot of time talking, and it's all introductions and it's, I am so and so and here's me and da 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 da. I don't think they're watching this stuff.
Okay.
I think it's all.
So
I hate to talk shit about it, but it's true.
Well, then what's the opportunity then?
I don't know. That's what I'm trying to figure out. It's like, well, what do you do just if you don't know? And it's like, well, is it good for the space to have a little bit of a brush burn? It
feels like it's already like we've been in it for so long. I think the worst you'd think that the worst companies would already be gone.
You'd think so, but we didn't see a bloodbath in 14-15 like we would have expected to see. Like it was a bloodbath, but it wasn't a bloodbath. They weren't going bankrupt and blowing up. You know, you remember? Like a lot of these things went to zero, you know, and then they went and they pivoted to like a medical marijuana, or they got taken over for like their shell value, things like that.
Yeah.
But a lot of the vehicles were repurposed. But I still feel like it wasn't as
I think
bloody.
Yeah, maybe a lot of them were able to pivot to more flavor of the weak commodities where they were able to raise some dough. Like how many lithium companies are out there now? But what happens if there's not, like, what happens if there's no pivot? What's after lithium? I was seeing some AI, I guess more AI companies out there, but those are just a handful of companies. Still, we have like 2,000 companies, junior explorers out there that are still around.
Now, we ever missed the old AI bump, eh? We thought should have stuck around. Just held on, baby. AI would be all over right now.
No. Yeah. Raise more money. We already had money.
Yeah, we had money. It wouldn't have made a difference. And I mean, that was the oddity of being in this sector too, was that you're insulated from the broader trend. Like even though AI was hot,
Exactly.
you weren't really seen as an AI company
Capped by the niche, right? So
yeah, exactly. You were by the tech world, you weren't seen as a AI company, and by the mining world, you weren't seen as a mining company. And so you're like in limbo.
Raise $100 million and buy a producing asset. That's probably like
At $1 billion valuation.
At least if
Full
it's like at least we're bootstrapping, building value organically, versus coming out of the gates at $1 billion value and trying to justify that. That's hard. There's not a lot. Like it's hard to be $1 billion company.
Yeah, for sure. Anyway, that's crazy that those guys pulled that off.
Yeah,
we've gone a long way. They've come a long way, and I mean, hey, listen, you pivot if your business isn't working or you see something that's critical. Like, don't hesitate, pivot. So that's okay. They pivoted. They pivoted to looks like African copper.
Our pivot was smart.
Now they're just going to be another African copper producer, justifying how they, unlike everyone else over there, is actually going to do it right and do it clean and do it responsibly, which is literally what everybody does. So I don't see how they've got. That's just like, well, you know,
stay private and keep on getting that Silicon Valley money, I guess, and keep on telling them that it's
clean and operated responsibly. Yeah, exactly. Well, and which most of these things are. I mean, that's the truth. I listened to, who was it? There was a guy on Joe Rogan's podcast that came on there to talk about Cobalt. And like, I like that podcast. I like a lot of his guests. I like a lot of this stuff. But I was listening to this guy and it was like, oh my God, like he got it so wrong.
Oh, yeah.
Oh, he was saying, he's like, oh, Glencore and da-da-da. You should see the slave labor and the children's working in these mines. Like he was misrepresenting it as like these big companies, that's what they're doing.
Yeah.
And he's like he just did us a huge disservice as a mining industry.
Well, that was the narrative when it first came about, when they're like, look at where Apple is getting their cobalt from, right? Like the kids and stuff.
Oh, that stuff's happening over there, but it's not publicly traded, like regulated big companies that are operating in that way. That's all like Garimpero or Galamsey, depends on what country in the world you want to call it, but there's all illegal mining, right? That are working in these areas and doing very dangerous and unethical things. But that's how they scratch a living out, right?
Yeah.
And that's their own, and then they're selling it wholesale.
Yeah.
You know, their products, and it's like, well, somewhere in the daisy chain, it gets picked up by like, you know, a major company somewhere across the ocean, right? They don't know where that material actually came from. But again, to say it's like all these operators in those countries that are doing it really a bad job of it, like that's BS. So what else do we want to talk about today?
I know I may have to put some money in the NFG jar, but I want to talk about Labrador Gold because a lot of people are asking about it. Like, is that something that you can talk about? They put out a hole, and I just want to get your opinion on it because
I can talk about Lab. Pull up the hole. I actually didn't see it this morning. I know we put out a hole this morning at Knob.
Right there, Golden Glove. Dropkick is further up north, and they put out 31 grams over 0.45. So
Okay, so what was put out today?
drop kick.
Drop kick up there, north side, west side of the fault, 2.6 kilometers north of their last hit. That was 9 meters of 2 grams, including half a meter of an ounce. And then you've got 5 meters of a gram and 2.7 grams over 3. Okay, they're hitting. So they've got a couple in drop kicks. They got a big vein follow up hit with the 9 meters of a gram at big vein. That's pretty shallow. Drop kick, big vein. Okay, so I mean, one of the things that I guess Labs has to contend with is their land package is a little oddly situated around the Appleton Fault. So if you go down to a map, you'll notice this on their stuff. It's rather unfair for me to point this out, but you'll notice that they don't have a ton of description as to where their boundaries are, right? So you're looking at the fault, let's say, you're looking at a feature there. So here, they give you some idea of where the claim boundaries are with the NFG, with NFLD in this embedded image, but you don't really see where their boundary is. And so part of the problem with Lab is that they have a hell of a lot more on the west side to work with than they do on the east side. That being said, like the east side, I believe, is where they should be playing. I think they know that too, but they've been playing around in the west, and the west is fine. We know the west is good now too from our stuff. I mean, this stuff takes a lot of drilling. It's not something you can throw one hole at it here and there. Like you can't just reconnaissance it. Like you have to go in there, and you have to, and they have the money. They had the money at times. Like they've gone through periods of time where they have $20-30 million.
Yeah. Like there's obviously something there.
Why baby it so much?
Yeah. Mm-hmm. So you're thinking, so their strategy was very different compared to NFGs in that.
I think they're just trying to poke. I think they're just trying to stay alive. I think it's a bit of a sit on the cash and wait around, and the market cap's drifting backwards, but everyone's getting paid, and you know, it's a hole here, it's a hole there. I don't mean that in a bad way. It's just true. I mean, it's just like you could go out there and do an aggressive program, and you'd end up with continuity. You'd end up with these zones leading you to other things. I mean, some of this stuff, you find these cracks, right? Like, let's say you find like, at Midway, they've got this 2.2 grams over 13 meters. You know, I wouldn't be surprised if I looked at that core and I saw some like structural feature and then all this other ancillary veining that was around it. And the reality is, if you chase that structure to depth or along strike, it'll lead you to a place where it comes into contact with possibly another one. And you'll end up with a beautiful blowout of craziness. That's an orogenic system. Mm-hmm. So what I'm describing is not unique to this universe. This is not unique to this part of the world. This is like, if you're in the Abitibi, that's how you explore. If you're at Macassa, if you're anywhere in Kirkland Lake, if you're anywhere in Rwanda all the way through to Val-d'Or, with the exception of possibly like a Osisko's Canadian Malartic deposit, like with the exception of a Canadian Malartic, or maybe like a VMS deposit, like La Ronde. Like there's a couple of things, there's a couple of areas that'll be exceptions to that general rule. But by and large, if you're in an orogenic gold camp, this is the types of battleships you play. You find these prolifically mineralized structures, you chase those structures where they're going to have interactions with other structures, and then you're going to have blowouts. And so, you know, and it's the aggregate of all of it that, you know, it makes you a mine. And so the problem is you can't solve it. You can't solve this puzzle with like a little hole here, a couple holes there. You know, let's go a kilometer away. Let's do another hole over here and see what we get. You know, you got to kind of throw a few in there and see and chase things. And that takes money. And so I don't know. I don't know what their cash position is. If we can look at it on CEO.
Go to the main page and go up. Let's go to their website. They're going to have it on the corporate deck.
Yeah, so this slide here on the deck is really good. So we could go to slide 5 on their PowerPoint.
Is
on
that
their
call
website.
in there?
Slide 5 of their PowerPoint, our flagship project, shows you what I was talking about with the east side and the west side. So you can see where a big vein is, right? So if you kind of can zoom into that image a bit, you can see how much of the west side of the fault they have versus how much the east side of the fault they have. Mm-hmm. They're focusing on the west because they're going to have west from kind of the south all the way up to the north. And so they've got to make heads or tails of the west. The east, they have about a 3 kilometer stretch north of our boundary of the eastern play, and then beyond that, all the way up, right? But you can see there's clearly a difference in how much, east versus west they have. From that perspective, they're somewhat limited in what they're doing up there. And I think it's about a strategy. If they have 16 million in cash, this is part of the game. They're like, we're going to drill some holes, stay alive, hopefully not drift backwards and down too much. Maybe wait for NFG to, come in and do something strategic there. That might be the play. The more activity, the more buzz that NFG gets, they're going to get, they're going to get carried along with that story. So realistically, there's really no sense of urgency for Lab to really do much. It is an interesting opportunity investment wise, but I would say that, exploration wise, they're kind of going to do just enough to kind of keep things with a bit of a pulse.
Yeah.
And show that they have system, which I think they're doing. And
not that
don't
bad.
hate the player, hate the game.
If they have 16 million, their 30 million cap, EV is pretty good.
Yeah.
EV looks pretty good, eh?
Yeah. Yeah.
How much lower can they go?
Probably not a lot.
Mm-hmm.
Yeah. I'd say, whatever. Like it's, it is what it is. So, yeah. So 16 million cash. Again, if it was me, I'd go for it, go try to find something, but that's not everybody. So that'll wrap up our episode today. As per usual, we don't know what we're talking about. Don't investigate anything we say. Don't listen to us. Do your own homework, and we're not licensed to tell you anything. So with that, hope you enjoy your week, and we'll see you guys next week.